Hi there, welcome to Kneppy Invest and welcome to May 6, 2024. In fact, we may as well call today Downgrade Day. We are in confession season. Confession season means the management of a company, the CEO and whoever, have been told by some more important managers that the company is not performing as well as they expected or outperforming what they expected, and they'll have to revise their guidance. And we saw a few of those today. Unfortunately, the majority, if not all, the trading updates we saw today were negative. One of them negative by a fair bit. The interesting thing about two of these updates is it seemed like the market was aware this might happen. And I'll discuss that and why I think that when I talk about both of these companies. There was one good announcement today, and that company came in at number one. I might be a little bit biased when it comes to this company because I do own it, and I am bullish on the future of this company. And just based off some of the commentary within this announcement, in fact, they released two announcements, including a trading update. I think the market should be even more bullish than this company than it is right now. But to be fair with the market, the share price has increased by about 40 to 50% since I bought into that company over a month ago. Yes, only a month ago. So the market has about 1 hour left in trading today, and that does not include the closing auction. And overall, a pretty good day based off the movement of all the indices that I can see above there. But before we have a look at what has happened on the ASX today, have a look at some of the best movers or the worst movers on the ASX, individual companies. Let's have a look at some tweets. Why not? Why not do this? What is exciting the market? Or what are the tweets that are getting people riled up? The first one, and I just bookmark these. That's probably the easiest way to go through these. The first one is from Unusual Wales. And this is a tweet in regards to Berkshire Hathaway or Warren Buffett. So we have that infamous meeting in Nebraska, Omaha, Nebraska. Yes, I have been there, but I haven't been to this meeting, and more than likely I'll never go to this meeting. And this was an interesting tweet because some people believe that Warren Buffett is the greatest investor of all time. And look, I'll listen to their argument, but even though he is considered by many to be the best, the greatest investor of all time, he still makes quite a few mistakes. And that's very important to understand that we all are going to make mistakes. And if we realize that Warren Buffett makes mistakes, then I think we come to much better understanding that we too will make mistakes. So Warren Buffett revealed that he dumped Berkshire Hathaway's entire Paramount stake at a loss. I was 100% responsible for the Paramount decision. Buffett said it was 100% my decision, and we've sold it all, and we lost quite a bit of money. You might as well hear that the number one rule of Warren Buffett is not to lose money. And I do believe some of his disciples, and I believe there are some people who have shrines to Warren Buffett out there, and when they read something that Warren Buffett says, they believe it 100%. And when they say Warren Buffett says the number one rule is don't lose money, they believe that applies to every single decision they make. Warren Buffett means when you make all these investments, the goal is not to lose money out of all these investments, because you are never, ever going to be 100% successful with every single investment decision you are going to make. And I don't believe there are some investors out there who worship Warren Buffett who actually think that or even know that. Anyway, so that's very important. I might go through some of the videos online when it comes to this meeting. It's going to be interesting because Charlie Munger's not there. So one of the best things about this meeting was just the toing and froing between Buffett and Munger. And I just sometimes liked what Munger had to say. Next one, we have this one from Game of Trades. And this was actually a really popular tweet. 208,000 engagements. Is that engagements? Is that what that means? Views. 208,000 views, 1,900 likes. And this one has to do with the yield curve, which I believe might be still inverted. What do I do that? In fact, there's two tweets from him. This person or this institution, whatever they are, I have no idea who they are. Anyway, the yield curve has been inverted for 500 days. Yes, it's been inverted for quite a bit. This has only happened 3 times since 1920. 2008, 1929, and 1974. And those 3 years were quite important because we saw significant downturns in the market. Yes, all 3 saw more than 50% market decline. I don't like how when you bookmark it, it then takes this. There it goes. And all 3 of these instances, we saw the market decline 50%. So we expect a final rally to occur before recessionary concerns finally kick in later in 2024. Now, if you go back to my predictions I made at the start of the year, I said the markets will decrease this year and we will go into recession. Now, I don't necessarily 100% believe my predictions because I know forecasting the future is a really hard task. And I just did that in Thunder and 5. Yes, I agree, Thunder and 5. But just because this has happened 3 times in the past doesn't mean it's going to happen again. So this is a very small sample size. And possibly this time is different. This time it's different. Probably the 4 most damaging words you can hear whenever someone says this time is different, more than likely it's not. So history doesn't repeat, but it often does rhyme. So there is a possibility that this is true, that we are heading for some tough times. Just a possibility at this time, but I think it's very wise to just be aware that this is a possibility. Doesn't mean you should sell everything right now, and that is a mistake some people make, is they just sell everything and just run for the hills, and that could be a mistake. This one from Michael Arur, talking about women not having children anymore. I'm not going to discuss that. Why not? This is an interesting one. Another one from Game of Trades. No, now I know how to do this. So this is in regards to household savings. I haven't thought about this until I saw this tweet. So because of COVID-19, we saw household savings just rise and get to extreme levels, 10% apparently, a share of GDP. And over the past few years, it's been falling, but now it's negative. So households have now run out of excess savings because of COVID-19. And there's a possibility that savings saved us from going to recession over the past few years. And if interest rates stay where they are, in fact, even if they rise, there's a possibility they might rise. I think we are heading for some troubled times again. So current levels are worse than even 2019. Not sure why even 2019 is there. The worst part is that it's happening just as the labour market has started to weaken. This won't end well. Now, more than likely, Game of Trades is quite bearish. I haven't really gone through the rest of their tweets, but I just found this interesting that savings are now negative. And that could lead to some interesting times in the next few months or even the next few years. And finally, that's another one. Talking about, I think very similar to Game of Trades. In fact, this one has both the savings and the yield curve. So maybe this person looked at both of those tweets and did their own tweet. This is my quant. I don't know what that means. Is Grant Cardone a quant? Maybe. So he's talking about savings. Tens of millions of households will have their retirement. Oh, no. This is completely different. This is talking about the stock market is due for 50% correction, and that 50% correction will destroy retirement and savings. And he's talking about the yield curve being inverted for 500 plus days. Okay. And the next one, now this is just a fun tweet. Number of years it took each product to gain 50 million users. Airlines, 68 years. Cars, 62 years. Telephones, 50 years. Credit card, 28 years. TV, 22 years. Computers, 14 years. Internet, 7 years. PayPal, 5 years. YouTube, 4 years. Facebook, 3 years. Twitter, 2 years. WeChat, 1 year. Pornhub, 19 days. I did hear someone say that sex sells, and yeah, it's true. Marketers know that. Advertising people know that sex sells. Yeah. So just a fun tweet. World of Statistics. It's the first time I've really looked at a tweet from World of Statistics. 1 million views. Okay, let's have a look at the ASX today. So we've had a good day on the markets. And this is to be expected because of what happened in America on Friday. Weak labour market got everyone excited, which is the complete reverse of what actually should happen. But who are we to complain? So let's have a look at the sectors. Real estate and utilities up. Real estate is not a surprise because with the weaker labour market, there is now a higher chance maybe, or the market is thinking there's a higher chance that interest rates will now drop, and that's beneficiary to real estate. Utilities up. IT up 1.1%, which is interesting because XTX was only up 0.12%. So the all tech is different than the information technology sector. Materials up 1%, financials 1%, and the only two sectors down, industrials and energy, and healthcare, fairly weak day as well, only up 0.08%. In fact, let's have a look at the 52-week. This might be interesting. So IT up 42%, financials 19%, healthcare down 4.5%, staples down 14%. So people have gone defensive in the past year or so, and defensive is staples, and that's the worst performing sector. And healthcare has been weak, down 4.5%, but IT is the place to be. And different indices, I'd say most indices are up except maybe, what was it, energy. So let's have a look at the performance of indices. Best performing indice is REITs and real estate, which is understandable again. And the worst performing indice is industrials, down to 0.27%, and ASX All Tech, down 0.2%, just updated here. So I'm just going to click on ASX All Technology. Do they have a list of companies here? Hoping they do. I have a feeling they don't. No, they don't. I have a feeling I've done this before. Have a list of their companies, please, please, please. Anyway. Okay, so let's have a look at the top gainers and the top losers today. And I can almost guarantee you at least the top two companies in my top 5 ASX companies announcements of the day will be on this list. One top gainer and one in the top loser. I wouldn't be surprised if the top loser is number 2 company. So in fact, let's start with the top losers. See if that company is the worst performing company today on the ASX. And it is. Tourism Holdings down 37.9%. And I'll talk about that company when I talk about the top 5 announcements of the day. Otherwise, Move Logistics down 32%, but it's online turnover. Rincon Resources is all over the place. Lots of volatility in that company. It's a day trader, a gem. They probably love Rincon Resources. I have no, yes, I've been looking at Clarity Pharmaceuticals. I have no desire to even think about taking a position in Rincon Resources. You can see the daily chart just looks insane. If you look at the 5-minute chart, you probably see why. Yeah, it's just a day. And today is probably the weakest it's been for a while, but we have seen a bit of a bounce. Share price got as low as 9 cents today and has now rebounded to 10.5. So Rincon Resources, otherwise, nothing in this list that has me excited. Hancock and Gore. I have no idea what this company does, HNG, but they did release their financial results today, down 12%. Maybe a company to have a look at, well, maybe not because the share price is down 12%. Hancock and Gore, industrials, capital goods, so they manufacture something. Illiquidly traded, I assume. Chart. Very negative today, yeah. So it is liquidly traded, but not overly. So maybe a company to put on my watch list in the future, but maybe I shouldn't because it's had a bad day today. Let's go back to the top losers. Otherwise, by market cap, Block down 9.43%. Why? Did Block release something bad? I thought they released results recently, but that was the 6th of 5th. Statement of changes in beneficial ownership. They released their quarterly report on the morning of Friday, but the share price responded well. I'm pretty sure the share price was up. So what's happening with Scare, or Block, I should say? Oh, that's 5 minutes. You can see, this is an amazing chart. So on Friday, the share price opened up 8.8%, and then today it opened up down 8.6%. So what has happened with Block? I have no idea. It did not make it into my top 5 lists. Interesting chart, but just what's happening with the trading of Square or Block is interesting in itself. Okay. Oh, I shouldn't have done that, but there we go. And otherwise, other back performing companies today include Somerset Group, Healthcare, but low turnover. Imaging, IPD Group, a company I do own, down 5.8%, without doubt on no news flow. I'm not sure why there is some selling with this company, ceasing to be a substantial holder, nothing released from the company, just maybe some profit taking, but they're in the right space. Electro-Optics down to $1.55, which is interesting because I just own a small parcel now. Had been trading it, but not anymore. Otherwise, Alcidion down 5.8%. There was a little bit of excitement with Alcidion the last week or so, but it was running on no news, so I don't care about that. Now let's have a look at the best performing companies today. By percentage change, we have a company called ITT, Thrive Tribe Technologies. I don't remember this company releasing any information today. Let's confirm that. Nope. Last news from the company was the 30th of April. I probably should have looked at turnover first. Yeah, pretty low turnover. What else do we have here? There's the company I was looking for. Southern Cross Engineering or Electrical Engineering, the company that will be number one of the top announcements of the day, coming number one. Share price up 18.16%. Probably what I would have expected, real solid announcements from the company today. So not surprised to see this company in the top performing companies on the day. And look at the turnover, massive turnover coming for Southern Cross. So if you just exclude the turnover, this is by far the best performing company on the ASX. And as a shareholder, I'm fairly happy. Now by market cap, well, it's Mesoblast. Again, I think this is just J Traders. Immutep. I don't know anything about Immutep. I'm assuming it's a biopharmaceutical, I was going to say exploring company. This chart looks interesting. Biotechnology company, development of LAG-3 immunotherapy products for cancer and autoimmune diseases. Did they release anything today? Well, they released something on the 2nd of March or May, positive initial data for phase 2 soft tissue sarcoma trial. So let's have a look at the chart. What was it? IMM, Immutep. Chart actually looks really good. I like this chart. I do like this chart. Increasing volume. Chart looks nice. Market cap of the company is 517 million. So what I'm going to do is put this chart, and this company is in none of my watch lists. There you go. And now it is. It's in my daily watch list. We're just going to follow the share price movement of this company. But market cap, and this seems like it's a story stock. And when a story stock has a market cap of 517 million, I'm more than likely going to stay out. That's true for Clarity Pharmaceuticals as well. Even though I wanted to buy some shares in this company as a hedge against Telix Pharmaceuticals because they're doing not the same thing, but they're sort of doing the same thing, but using different elements, if that makes sense. You know what I mean if you do know or follow the company. And there is a chance, just a chance, that Clarity will disrupt Telix, but it's still many years away. But anyway, that's a different company. So Immutep, I've never looked at this company before, but it's had a good day today. Up, was it up? 9.77%. BrainChip, nice little rebound. Restaurant Brands released their results the other day, or training update, up 6.3%, but low turnover. Doug Technologies, up 6.9%. Not sure why, but I'm not complaining as a shareholder. Although I did take profits with that company. I think I sold 2/3 at $2.50. Now it's $3.10. But I'm okay with that. It was a good decision, I think. And otherwise, nothing else here. Can't remember any of these companies releasing any announcements today. And let's have a look at the top 5 announcements of the day. Before that, I'm going to talk about 5 or 6 companies that did not quite make it on the top 5 list, including Westpac. Released the half-year results, share price up 2.6%. Results were weak. Without doubt. Are they doing a share buyback? Maybe. That's what happened with NAB. Their results were weak. They announced a share buyback. The market rallied on the share buyback. In fact, I heard someone say initially when NAB released their results, the share price didn't rally, but when they started buying or were allowed to buy shares back, share price started to rally. This company doing share buyback? No. Can't see anything. But anyway, I have no interest in the banks at all. So let's have a look at the chart. Chart probably is neutral to slightly bullish. Neutral to slightly bullish. But again, I think all the banks are way overvalued. The P ratio of Westpac is 13.9, and I'm pretty sure because the share price has rallied today and the profit has fallen, the P ratio now is higher and maybe significantly higher than 13.8. I'm assuming the profit did drop. Let's have a quick look at the interim results. Email to shareholders. I'm not a shareholder, but I'm still going to look at this announcement. Profit was up on the second half. Return on tangible equity, net profit down. And there is a share buyback. There you go. That's why the share price has increased. And they're doing share buyback. It's a way to, and Apple did this perfectly. It's a way to smooth over, maybe not smooth. It's a way to dress a pig. No, that's probably not the best. That's probably a bad analogy. It's to put really good clothes on a pig. These are pretty weak results from NAB, just like from Westpac, just like they're weak results from NAB, just like they were weak results from Apple, but they're doing a share buyback. In fact, they're increasing the share buyback. I'm not sure why, because the company is overvalued. You only do a share buyback when the company is significantly undervalued. When will company managers learn? So that's Westpac. Banking Corporation releasing their results. Qantas, share price flat, and they agreed to pay a lot of money because of their shenanigans, reaching agreement with the SCCE. So if Qantas has been bad to you, more than likely you're going to be or get some payments. I'm pretty sure this has to do with flights that were cancelled, and they have to repay some of that. I don't fly much, and I did like Qantas, but it seems like they've got a little bit too greedy in terms of profit. But anyway, they're an airline, and airlines are horrible investments. And Warren Buffett says the same thing, but he still bought some airlines back in 2020 or 2021, and then he sold them at a loss, even though he said airlines are a horrible investment. So that's Qantas. PNC, Pioneer Credit, up 7.23%. Further upgrade to financial year 24 PDP investment guidance. I have no idea what PDP means. I don't know anything about this company. And this company could have made it onto my top 5 if I just knew what PDP, purchase debt portfolio. Is this good news? I have no idea. So they're upgrading their financial year 24 purchase debt portfolio from 85 million to circa 95 million. This represents a 12% increase on prior investment guidance. I don't know what this means. So if you do know what purchase debt portfolio means, just leave it in the comment section of this video. Otherwise, I'm not a fan of this company. Or maybe I could be a fan if I know what they do. So providing high quality, flexible financial services support to help everyday Australians out of financial difficulty. That sounds like it's a bad business, to be honest with you. Trying to help people out of financial difficulty is a way to get into financial difficulty yourself. Okay, maybe I'm being a little bit unfair on Pioneer Credit. Let's have a look at the chart. Maybe I'm being too mean. Pioneer Credit, does the chart look good? Not horrible. Weekly chart. Oh, the weekly chart looks terrible. They have not recovered from COVID-19. There was a nice little bounce, but prior to COVID-19, the share price of this company was much higher than it is now. Anyway, I have no interest in this company, even though this could be a good report. What's the market cap of Pioneer? That's the other thing. I'm assuming it's 100 million or something like that. 59 million. Is it profitable? Why am I looking at this? Earnings per share 1.4 cents. So earnings per share 1.4 cents. So it has a pretty big dividend. I mean, high PE ratio. Well, according to Scomsec, this company has a PE ratio of 520. A dividend yield of 13.3%. So on one hand, you're thinking, oh, God, this company is extremely overvalued based on the PE ratio. But dividend yield of 13.3%. Wow. Wow. Anyway, I shouldn't be lingering on Pioneer Credit, but I just want to learn what some of the terminology is. Magellan Financial Group released funds under management. The market's neutral. And I have a feeling the reason market is neutral is because funds under management for this company has been dropping. This might be the first time that flows, and I think that's more important than funds under management, because funds under management also includes the capital gain or loss. Net flows is important. In April, net flows were flat. I'm pretty sure flows have been going down for the last few years, comprising net retail outflows of 0.2 billion and net institutional inflows of 0.2 billion. So possible inflection point for Magellan Financial Group. Otherwise, total funds under management actually dropped by $1 billion, and that's because the market has been weak in the past month, because otherwise flows were flat. So it has to be the market performance of their investments. But anyway, market is flat, and I would assume, even though there's been some weakness in the share price over the past month, I'm assuming this might be the end for the downtrend in Magellan. So this is the weekly chart for the company. And if you look at the daily chart, I'm calling it. This is starting to look more interesting. Downtrend, I think, has come to an end. I was trading this company, got out because it didn't turn my way, and it needs to break above, I'd say above about 10.50 for me to get excited about Magellan right now, and it's about $2 off. But I'm calling the bottom. The bottom was reached on the 26th of August, 2023, at a share price of $6.13. And the other two companies that maybe deserve honourable mention is Kogan Group, or Kogan, down 2.3%. It's not surprising. Share price has tumbled a fair bit since they released the trading update. But they announced, or they received a query from the ASX. And in a roundabout sort of way, Kogan called an analysis of this company an ignoramus. And this is what they said. If I can find it. I won't be able to find it now. Yep, here it is. The analysis views, because apparently the analysis gave a profit downgrade for the company or something, and that's one of the reasons why the share price decreased. I didn't go through the whole thing, but this is what the company said. The analysis views referred to in ASX letters, which, for instance, perceive a decline in Kogan first subscriptions and Kogan's marketplace sales, ignore important context concerning seasonality trends referred to above. So what they're saying is this analysis is an ignoramus. They didn't understand there's a bit of seasonality when it comes to Kogan. And Kogan could be right here. I don't know. They could be right. There is a bit of seasonality to Kogan, and maybe this analysis completely missed it. So you can go through. Here it is. Here's what the analysis says. Extracts from Dow Jones Newswires on the 26th of April. So amazing that ASX follows Dow Jones Newswire. Kogan price target cut 11% by Canaccord Genuity, and Citi cut their target by 13% to $4.80. Big difference between Canaccord Genuity and Citi, and they go through some reasons why. So Citi, they even name the names. Citi analysis James Wang says the update shows that multiple metrics are pointing in the wrong direction, and UBS also cut the target by 14%. So three analyses cut the target, and what Kogan is saying is they don't understand the business because of seasonality, and they're ignoramuses. So they sort of said that because they said ignore. They actually said the word ignore, which means they're ignoramuses. Anyway, interesting announcement from Kogan, but the share price has been in a significant downtrend because of that trading update. And I think the ASX was saying, do you reckon this is more price sensitive than you're letting on because of what has happened with the market? Look at that share price decreasing significantly. And this has been a wild ride for Kogan. Share price goes as high as $8 and about 70 cents. Now it's $4.73. So it's almost halved in about a month. That high was on the 13th of March. So a month and a half. It's almost halved. But the share price of Kogan is getting to an important support level at $4.28. If it gets there, potentially I will take a swing trade in this one. What I mean by swing trade is, or maybe a dead cat bounce trade. That's probably the best way. Oversold trade. I would assume Kogan is really oversold right now because of how quickly the share price has dropped. And you can just use RSI for this. RSI, Relative Strength Index. There it is. It's oversold. But it was overbought for a long time back in February, and share price kept on rising. And now it's significantly oversold, and it could remain oversold for a while yet as the share price keeps on decreasing. So just because it's overbought, oversold, doesn't mean the share price will turn the other way, but does increase the chances slightly. Not sure the statistics on it, but it's not something that you just focus on. You just don't focus on the RSI and make decisions based off that. You have to use a whole suite of different indicators. And the main indicators I use is moving average channels, support levels, what's the other one? Resistance levels, that sort of thing, and round numbers. which is sort of resistance support. And the final company is Nuerotech International. Share price down 7.7%. This is really interesting. Why am I saying this is really interesting? The company released an announcement today. Rhett syndrome phase 1-2 trial shows significant benefits. That's important because Rhett syndrome is a disease that Neuron Pharmaceuticals alongside Acadia have now a product for. So Nuerotech is trying to disrupt Neuron Pharmaceuticals, but this is only phase 1 and phase 2 showing significant benefits. So why is this interesting? Share price down 7.7%. So the market's saying differently, but share price on last Friday closed at 9.1 cents. It opened today at 9.6 cents, went to a high of 9.9 cents, is now at 8.4. So we have seen a lot of volatility in this company's share price today. So initially it was up by almost 10%, now down 7.7%. So let's have a look at the chart for Nuerotech. And yeah, have I featured this company before? Because I sort of remember talking about a potential disruptor for Neuron. And I did put a line here, a resistance line. Look at that perfectly. This is why I pay attention to resistance support. So a really strong resistance level for Nuerotech was 12 cents. So it hit 12 cents here, back in February, pulled back, hit 12 cents again on the 17th of April, and then pulled back. And then the company released this announcement today. Now, I don't think this announcement is necessarily weak. I'm going to get rid of this, the RSI. I just think there is resistance, and there was enough demand for shares today. And the reason there was a resistance because the share price has been higher the last few months. So all these shareholders who bought at higher prices want to get it. They have to get out of this dog stock. The share price did not go up when I bought. This is a horrible company, and they're getting out. High volume coming in today as well. And if you just look at the 5-minute chart. Actually, let's look at the 1-minute chart. Well, it looks pretty, yeah, it's all over the place. But the share price went to 9.9 cents in 1 minute and pulled back within a few minutes. So this was just initial excitement from retail investors, and they made a mistake because the share price plunged. So anyone who bought at 9.9 cents is now down 14%, 15%. Which you don't want to see in one day after you bought during that day. You don't want to see share price down 15% on the day you bought shares, but that is new resistance. Those shareholders who bought at 9.9 cents consider this company a dog stock. They don't question their decision-making skills. They question the company. And that's the big mistake a lot of investors make is they blame everyone else except themselves. You have to look within. Really good volume though, increase in volume over the last or since the start of 2024. Okay, let's get to the top 5 announcements of the day, starting at number 5, and that's Endeavour. I am interested to see what has happened with this company's share price. Didn't see in the top losers or the top gainers. The company did release some sort of trading update. On first glance, I thought this particular trading update was slightly positive, but I don't know how the market's going to read it. Okay, slightly positive, share price up 0.86%. So third quarter trading results. Why did I think it's slightly positive? Now, so numbers are up. That's the most important thing. So first 13 weeks of the quarter, numbers are up compared to the previous corresponding period. Now, this does not include inflation. So if prices were stable, would the numbers be up? That's one question I had, but they were a little bit positive. So unique and diverse portfolio delivers stable sales in soft conditions. So value, convenience, and product innovation continue to drive sales in retail. So if you don't know who Endeavour is, they were spun out of Woolworths. So they owned hotels and the alcohol stores, like what's it called? The one that I never go into. I don't drink alcohol, so do they own Dan Murphy's or something else? BWS or something like that. Anyway, well, they do own Dan Murphy's. It's right here. It's right there. Anyway, so after reading, or not really reading this, but it did sound like it was okay. It wasn't negative. Put it that way. Here's the outlook. Market interest have remained subdued to date in Q4, and trading is broadly consistent with third quarter in both retail and hotel segments. We continue to experience inflationary cost pressures and are responding by tightly managing CODA or CODBs, cost of doing business, I assume, including progressing optimization initiatives under our Endeavour Go program. Okay, so I don't think this was a bad trading update, and the market thinks likewise. And the reason I thought this comes in number 5 is because it's an okay trading update after we saw a slew of negative trading updates, which we'll get into. And I think possibly the end in the share price decline is there. There was a share price decline of 3.9% on Tuesday, the 30th of April. But the share price of this company has been in a downtrend for a while. And I think the blow has been reached. And that low was reached in November last year. But there's no uptrend right now. So I would want a confirmation of an uptrend before I'd even consider buying Endeavour Group. I wouldn't consider this company good value right now, and I don't even consider this company a high-quality company. So it says, according to TradingView, price-earnings ratio of 18, dividend yield of 4.2%. So I don't think this company is cheap. Don't think this company is expensive. And the main way or main reason I would own Endeavour Group shares is if the trend is in my favor and there is positive sentiment behind this company. And I think this could be the first step towards sentiment shifting to positive. I think it's becoming neutral, and we want the shift. We don't want that sentiment shift to turn more positive and the trend of the share price to turn upwards before I even consider buying Endeavour Group. But I think the bottom has been reached. So when I see the bottom reached for a company that has been in a long-term downtrend like Endeavour Group, I will become more interested in that company, and I will follow that company a little bit more closely. All right, so I think that's why this company came in number 5, Endeavour Group. Coming in number 4, we have the first profit downgrade, Graincorp, down 4.22%. So not as bad as it could. So updated earnings guidance and preliminary first half results. I saw this title, and sometimes when I read a title, I can mix up words. And I thought this said upgraded earnings guidance. And I went, oh, a profit upgrade, yes. And then I read it without realizing. And I went, this is not positive. This is negative. What are they talking about? And then I went back to the title and I saw, oh, it's updated. Updated. So it is negative. They do, and you can go through the numbers yourself. It is a downgrade. So underlying EBITDA downgrade. I think they even downgraded profit. Yeah, they downgraded profit as well. Yes. And they do go into reasons somewhere here. A few reasons. So the 3 reasons I'll just talk about right now. And this is one of the reasons, and there's one reason here why I'll will never buy an agricultural company for the long term, because the managers of these companies, even if they're the best managers in the world, have no control over one thing. And that thing, well, actually, they have no control over many things. Although not, yeah, they do have, I was thinking pests, but they do have a little bit of control over pests. But there's one thing they have no control, and that's weather. Now, they do or can control some weather phenomenon, including frost. And many farmers do that. When there is a frost forecast, they can help their fruit or veggies to I was going to say sustain themselves, to fight off the frost. But when it comes to drought or floods, we just don't know. We have no control over that. So this is the reason why Graincorp had weaker guidance than expected. Here it is. Here's the drop. So underlying NPAT 60 to 80 million, and that's down from 65 to 95 million. So this is a profit downgrade. Now, EBITDA and profit downgrade, a true profit downgrade. And these are reasons why. Continued softness in end-to-end grain handling margins, driven by stronger global supply of grain and oilseeds, which they have no control over, like competition, unless they're nefarious and they interfere with their competitors. Lower commodity prices, and again, maybe they could control commodity prices, and normalization in global supply chains impacting grower selling behavior and customer purchasing behavior. So many of those things they have zero control. But the second point here, drier than expected conditions in WA, reducing grain production and impacting importable volumes and margins. They have no control of that. It's to the whims of the weather. Maybe you can say they can import water I have no idea. And that probably is a very costly endeavor. I said that word on purpose to do, because I'd say importing water would be quite expensive. And costs associated with operational downtime at Graincorp's food measuring site at West Footscray due to unplanned equipment maintenance. That is something they have control over. So at least there's one thing they have control over, and that is that third point. But overall, this is an agricultural company. They have no control over some of the things that can affect their business. And that's why I would never own a company, agricultural company, for the long term. I will trade it, but never own it for the long term. But otherwise, let's have a look at the chart. Now, there has been a nice bounce. And the reason I say that is the share price opened at $7.70. Now it's $8.09. Share price has bounced 39 cents today. So on open, the share price was down about 8% or so. But otherwise, when you look at this chart, it's just going sideways. Bit of volatility there, going sideways. It's probably trading in a range. And in fact, it's been going sideways for the last 2 years. So no interest in Graincorp. I was thinking the share price might get down to these lows we saw here. So I was thinking maybe the share price could get as low as about $6.70. So still well away from that. And if I was bullish on Graincorp, which I'm not, I'd like to see the share price get above $8.70. It's not far from that, but after this particular update, no interest in Graincorp. Coming in at number 3, we have another profit downgrade, and that's from Spark, New Zealand, and down 4.24%. This is really interesting because the market spoke about this company. I had a look at the chart. I went, share price has fallen through support level. What's going on here? And the market spoke. The market thought Spark New Zealand might release a profit downgrade simply because I was just looking at the chart. I don't know if this was a true profit downgrade, because is EBITDA, how do you pronounce EBITDA with an I at the end? How do you pronounce this? EBITDA I. EBIT de AI. So this is a decrease in EBITDA I guidance. So it's not true profit. I don't call EBITDA a profit, and I'm not sure why they include I. So earnings before interest, taxation, depreciation, amortization, and investment. I have no idea what the I is. I'm going to Google it. I'm going to Google it. So is this the only company? So interest and share, here's one. It's from the ASX, so the ASX would know. Okay, this is from Hello World. So Hello World uses this as well. And they've got a definition. Adjusted EBITDA is earnings before interest, expense, tax, share-based payments, defined benefit expense, depreciation, amortization, and impairments adjusted. Okay, so it's impairments. Okay, that makes sense now. So earnings before interest, taxation, depreciation, amortization, and impairments. But the most important thing here, it's down from the previous guidance. Capital expenditure is the same. A slight decrease, but it is a decrease nonetheless. Keeping the dividends the same and capital expenditure the same. So this is a profit downgrade, not a true profit downgrade in my opinion, but it's still a profit downgrade. But let's have a look at the chart. So I have featured Spark New Zealand in at least one chart before, because the share price hit this support level. Share price was in a trading range and hit this support level at the start of April. So I thought there is a possibility the share price might bounce, but I didn't buy in because I was unsure. And then the share price, look at this, beautiful trading. Share price fell through the support on the 9th of April. And then it rallied back up to now the resistance level. Yes, support turns into resistance, hit the support level or the resistance level now, and then pulled back. So the market was testing to see if there was any selling when the share price got back up to that level. And there was selling. You can see that selling come in 2 days in a row. Not big volume, but there was selling. And then it tested again on the 30th of April, and it failed again. So what the market is trying to do is just, they wanted to see, and it seems funny that I'm describing or prescribing, what do you want to call it, human qualities to the market. But the market is a collection of people. And this is what the market does. So when some people, some investors, see the share price fall below 435 or even towards 425, they might think there's value in this company. Share price hasn't been this low for a while, and so they might get excited and start buying shares. And then some traders know that this level is a resistance level, and they start selling, or they see if there's enough strength in the buyers to push the share price back up above that now resistance level. And there wasn't enough people out there thinking this is good value, and yeah, that's why the share price did rally. And then it seems like the market was right. So one of the reasons why there might not be as many investors trying to buy into this company, because collectively the market thought, this company's under pressure. Maybe the company will release a profit downgrade. And they did. So let's have a look at the long-term chart for Spark New Zealand. And the last time the share price was this low was back not that long ago, June 2022. But you notice, if I do a line here, I'm going to do a line right there. So $4, in fact, I just do it $4. Why not $4? $4 is a very important level for this company. So we're just above $4, or this company's share price is just above $4. We've seen $4 reach back in June 2020, March 2021, January 2022, got very close in June 2022, and it's very close now. So that's a very important level. $4 is a very important level for Spark New Zealand. The last time it was this low was back during the COVID-19 financial panic. And you can see it didn't stay below $4 for very long. Got as low as $3.40 and then bounced very quickly. In fact, it bounced within a week. So Spark New Zealand chart has broken below our support level. And now there's another support level at $4. And I'm just going to follow Spark a little bit more closely just to see if it does fall below $4. Okay, that comes in at number 3. Coming in number 2, we have Tourism Holdings. We already know the share price of this company is down a lot. Now, down 36% as I speak. So they went into trading halt on the 2nd, which was 4/3, the Thursday. When a company goes into trading halt because of updated guidance, did they put guidance? If I remember correctly, they hinted that this was going to be negative. And usually if a company goes into a trading halt because of updated guidance, it's going to be negative. Let's see if they do. Yeah, which is likely to be materially lower than its existing guidance. Okay, so that's the most important words in this trading halt. So updated guidance is going to be materially lower than its existing guidance. So what is the definition of materially lower? That was a question I had. And I think the company sort of showed that indeed it was materially lower. So let's have a look at their updated guidance. And this was a bit of a kick in the teeth to shareholders. And I'll talk about why in a second. Okay. Now, the reasons why is a weakening economy has impacted most regions. So previously, the guidance for profit, so this is a true profit downgrade. Previously, their profit guidance was $75 million. Now it's expected, this is for financial year 24. Now their expected profit is to be between 50 and 53 million. So we're talking about a 33% decrease in profit. Now here where it comes interesting. And this is the reason why I started following this company, because they do have goals for 2026. And that goal in terms of profit, their goal for 2026 is for profit to be 100 million. Now they do mention here that Tourism Holdings has retained the goal for $100 million profit in financial year 26. Considered the assumptions underlying the goal and believe the goal remains appropriate. That's a big question. And I think the market is saying, you're crazy. Based on a positive rental growth outlook and a recovery in the RV sales market globally. So they are making some assumptions. Now let's have a look at this company. So profit or expected profit of $100 million. Right now, it's $50 million for this year. And this could be a reason to be excited about this company if you're looking for possible value. Now, I have to go to here. So ticker for this company is THL. Okay, so the markup of this company with the share price down 36% is $362 million. Now, I'm not sure the debt of the company, so you have to also know the debt. Let's have a look at the debt. Just by going to ComSec, balance sheet. I'm assuming this company has a bit of debt. Why is there no debt here? I am assuming the company has a little bit of debt. But anyway, let's ignore the debt. Let's assume the company has not much debt. I'm pretty sure they would have a little bit of debt. So the market cap is 362 million. So that means right now, based off their profit in financial year 24, this company is trading on on a P ratio of 7. Now, if they achieve the $100 million of profit in financial year 26, that means they're trading on a forward P ratio of 3.6. So this is telling me straight away the market does not believe this company can achieve a profit of 100 million. The market doesn't even think this company can achieve a profit of $50 million, and possibly the market thinks the profit's going to fall even further. They'll do another profit downgrade, and potentially profits in financial year 25 might be even lower, because otherwise this company looks ridiculously cheap at current levels. So that's interesting. Now, the other interesting thing about Tourism Holdings is when I read the goals in terms of profit and I saw the market cap of the company and the P ratio, I thought, this is a company worth following. But what is the chart telling me? The chart was telling me before they released this profit downgrade, the market is not sure about this company. Share price had moved into a well-defined downtrend. Share price not doing much before that. You can see it just sort of going up and down. And then the share price broke down below this support level at about $2.90 on the 20th of March. And the share price just kept on falling. So the market was not interested in this company. In fact, the market was more inclined to sell shares in this company than buy, even though there was perceived or a possible value in this company if they could achieve their goals. That's the simple reason why I was following this company, because the share price was in a downtrend. Share price was falling, but there could have been some value attached to this company. And now the share price has collapsed because of this profit downgrade. Is this the low? That's the big question here. And this all comes back to management. Do you think management are crazy? Do you think management can achieve their goals? And if they don't achieve their goals, they should all resign. Well, I'm being a little bit harsh there. I think it's always good to have goals, but the goals have to be achievable. And I think the market is saying right now, no, they're not achievable. I don't think you're going to double your profit in the next 2 years. That's essentially what the company has to do. They have to double their profit. Spinnerism is getting me again. Double their profit in the next 2 years. Okay, I'm going to definitely put Tourism Holdings onto one of my. I've got it in my cheap watch list. So I thought this company might be cheap. I've got it in my Buy Australia watch list. So that means I am following this company really closely right now. And this is why, because I thought there might be value. There's not. Or maybe there's not. I actually don't know. Okay, so coming in number 2, we have Tourism Holdings down at 36.13%, worst performing company on the ASX. But coming in number 1, I am a little bit biased with this company because I am a shareholder. Southern Cross Electrical Engineering, share price up 20%. Time is now 4 p.m. So we're in the closing auction. High of the day was $1.50, or open at $1.50, low was $1.41. So it was enough demand today to keep the share price pumped up. Released 2 announcements today. The award of a contract, $160 million Poly battery project, the biggest contract this company has ever been awarded. Now, I don't pay too much attention to contracts like this because I don't know the margins. That's very important. But I would assume there's okay margins in this particular project. They also release a profit guidance, and it's just the language in this profit guidance. So it wasn't really a profit upgrade, but they're anticipating a financial year 25 EBITDA. So this is really forward-looking. So this is a goal of at least 48 million. And I expect that there is a good chance, not 100% chance, a good chance that this company will release profit upgrades in the next year or so before where we get close to the end of financial year 25. The second point here is the whole reason why I took a position in this company. Strong structural tailwinds support expectations for further growth earnings in financial year 26 and beyond. Strong structural tailwinds. I did tweet about this, and I referred to these tailwinds as being Jupiter's red or great red spot. Winds in the great red spot are 460 kilometers per hour. That's the sort of tailwinds behind this company right now. Do they say anything else here? Yeah, so here it is. We are exposed to strong structural tailwinds in the data center sector, Australian infrastructure, particularly at West Australian Sydney Airport, and to decarbonisation and electrification works to enable Australia's energy transition. And I am very bullish on a few of those things: data sectors, data centers, and the decarbonisation, and particularly the electrification works that are needed in this country, and maybe even overseas. I'm not sure if Southern Cross is global. I don't think they are. I haven't delved deeply into that, but if they were able to expand overseas, the gas brake is on. Not the gas brake. The gas pedal is on full steam ahead. And let's have a look at the chart for Southern Cross Electrical Engineering. So I did not buy shares that long ago in this company. I started following Southern Cross, would have been probably November, December last year. Share price was about 80 cents. The chart was looking really good at that point. You can see the share price moved to uptrend in August of last year at about 70 cents or so. Share price moving up. And then share price broke above $1 on the 19th of March. And that was my trigger. I waited 4 days before I took a position right on $1. Now, it didn't break above $1. It broke above the hold highs we saw. Wasn't that old highs at 95 cents. Got to $1. Share price was straddling $1 for about 3 or 4 days, and I bought right on $1. Put a bit in, $1, and that was on the 25th of March, so just over a month ago. Now the share price is $1.47, so 47% gain in this company in just over 1 month, and pretty big volume coming through today. Last time the share price was this high, I'm going to say never. Oh, it was. Last time the share price was this high was way back in 2010. Okay, so significant tailwinds behind this business. And even though this is in my trading portfolio, and to be honest with you, because it's so much higher than my get out price, so my get out price I did set before today was $1.06. I will have to lift that, and I don't expect the share price to pull back to $1.06. So that's why I'm going to lift it. Anyway, so that's all I have for the video today. Top 5 announcements. I was going to go through some charts, but again, I've rambled on some of these top 5 announcements. So if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.